Okay, so now that we have a good idea of how to set our stop loss for these channel breakouts, let's take a look at how we would identify some potential profit targets. All right, now just like with the wedge breakout, you want to always use the swing high or swing low as your first target. So in this case, we would actually want to use this swing low down here as our first target. All right, and the same goes for a channel that is descending, where the market is moving back and forth between support and resistance, breaks to the upside. All right, we would want to use this swing high up here as our first target. Okay, so either use the swing high of a descending channel or the swing low of an ascending channel. All right, so if I draw that level on here now as our first profit target, let's take a look at this and try to put it all together here. So remember that we have two options for entry strategy. We can either enter on a break of this bar, or we can wait for the retest up here. Now also remember that our stop loss is going to go above this swing high here. So if I measure this out from this first entry to our stop loss would be about 250 pips. And if I measure that same distance, or that same level, down here to our profit target, you can see it's about 440 pips. Now here's the catch. 250 pips does not go into 440 pips twice. And remember that our reward has to be at least twice our risk in order to have a proper risk to reward ratio. So in this case, this would not be a proper risk to reward ratio. So if we wanted to have our stop loss up above this high, which remember we determined this to be the safest place for it, we would actually have to wait for a retest up here to enter short. Okay, so just keep that in mind whenever you're determining where your stop loss goes, as well as your profit target. Now in the next video, I'm going to show you a way that you can actually project out a possible target area. Alright, so I'll see you in the next video.